Oh, and we're live. Hello, everybody. Welcome back to Crypto Talks. My name is Phil. I'm joined by Rob, as always. And we're doing
Hello
TA Monday today again. Because it's Monday,
again.
right?
It is Monday.
It is Monday, I hope.
You seem
Otherwise,
surprised every week. You seem surprised by this fact.
well, I feel lost. I can't keep track of the days anymore. Anyway, yeah, so we're going to do Bitcoin, as always. However, today we actually have a question that's come in from the community. And I thought that was a perfect question to kind of start off how we do our TA, because it's actually a very serious question. Not that I expected it not to be, but it's a very good question as well. And a very real question that I think hits home with a lot of people, in some ways at least. And so I'm going to read this out now, and we'll see where we go. I can't actually show it on the screen because I have it saved elsewhere, so I'll just have to read it out. You ready, Rob?
I'm ready.
You're gonna love this one. Okay, so it states, "Hello, I recently sold my Bitcoin position in order to have savings ready to spend, as we have a little one on the way." So, child, obviously. However, as we won't need to spend it all at once, perhaps I've been a little bit too fast to sell. We sold at around 41K, which is kind of where we are right now, actually. We sold about at 41K, and we're thinking we should buy back in case the market continues going up. Do you have any ideas on when or even if we should buy back? Thank you. That's a pretty decent question, and I understand the predicament that you're in.
It is. It's a predicament which, quite frankly, a lot of people are going to be in right now. We've spoken at length for basically all year about how continuous inflation, how the cost of living has squeezed wallets and has squeezed the disposable income of people, and that's the sort of thing that drives bear markets, because it takes people's allocation. People do not have disposable capital, and if you're in a situation where you don't have disposable capital and you have needs, you have a mortgage to pay, you have car payments to make, you have a child on the way, or you have a child to pay for, well, your assets come secondary to those absolute essentials, and you will sell at any price. Now, if you can avoid doing that, then of course that is essentially the delayed gratification that is investing. The idea that you try and hold something that you believe has a long-term prospect of going up reliably. You don't want to trade those in for short-term needs if you can avoid it. Sometimes, however, yes, they are unavoidable. Of course, you have to give this the caveat, isn't this isn't financial advice. Everybody has to do with their own money what they will. But yes, the kind of my thought is always never rush and go all in or all out is my number one sort of suggestion, that people who go and sell everything and then you wake up the day after and it's 10% up, then that sucks. It hurts just as much as buying something and then waking up the day after and it's 10% down. It's the exact same effect. It's just the chart's reversed, and there isn't any harm sometimes in being 50% in, 50% out. Just de-risk. If you need that money, then take that money off the table. Take the money that you need off and let the rest ride. You don't have to be all in.
Yeah. And no, I'd like to add something at that school, because I did have a brief conversation with this person, and I'm not going to, but I know that it was.
Your mic's dropping a bit, Phil.
Is it? How about talking like this? Right. That's so better. I know that it was a sizable chunk of Bitcoin. It was 0.7, right? That's a big piece. And I know that he bought this in, if I remember correctly, I might be wrong, but it was in 2020. So it was, before the COVID thing, or during the COVID thing, somewhere around this. So he got a good price, right? Didn't sell it in the peak market and didn't sell it at the bear market bottom. He sold it at 41K, which is still a good profit, right? So
It's a lot better than most people.
yes. So keep in mind that, you know, what I would say to this is like you said, like maybe not sell everything, maybe not buy back everything. I would say that, you know, figure out how much of that money you have, because I know the money is still sitting there in an account. If you have money to put in somewhere now, and you only want to deal with Bitcoin, which is what I was told, sitting with everything out at a time like this, I would say for me, I would be uncomfortable doing it myself, right? Personally, I'm close to 100% in at the moment, right? But I think what I would do if I was in this situation, I would look at when do I need to spend and how much of this cash. I think it was February when they're due with this child, and I would probably put most of it back in now, and then start taking stuff out when you're gonna spend it. So you liquidate the piece that you need to spend. That's what I would do personally. So if you say, okay, we need to buy this, and this, it's gonna cost us $1,500. Liquidate $1,500. Let the rest ride. That's what I would do personally. But
the way I would do it, I would do a calculation, and you go, okay, so it's 0.7 Bitcoin, and let's say what is your ultimate realistic long-term price target for Bitcoin? Now let's just go with $1 million a coin for simplicity. So 0% Bitcoin, so that's $700,000 that were just sold for 29,000, I think I worked it out to be. So that's, if that's the long-term price target, are you comfortable leaving a potentially $700,000 trade on the table for the sake of 30,000 now? Alternatively, if you had never ever bought Bitcoin in your life and you had $30,000, would you at this point go all in now and put that money in Bitcoin and purchase 0.7 Bitcoin in one go? Those are the two completely opposite sides of the equation. Now, chances are you're probably somewhere in the middle. And if you think one of those is 0% allocation, the other is 100% allocation, well, work out where you are along that line. How much are you willing to miss all of that move? And maybe that move takes 20 or 30 years or 50 years. Maybe it only gets a quarter of the way there. Maybe it goes 5 times further and gets to 5 million. Nobody knows. But what is the opportunity cost of the decision of selling now? Because there is a cost to selling, and that is the potential gains that you're making in the future. And so what has to be considered is what is your ultimate price target, and what is your percentage belief that it's going to get there? Because if you're 100% certain it's going to get to $1 million, well, then selling it all today is absolute insanity. But if you only have a 20% conviction it's going to get it to $1 million, but you have an 80% conviction it's going to get to $120,000, well then, okay, you're missing a 3x gain there. That's a gain that is going to be completely blasted away by other coins that are going to show up that have other buying opportunities. So maybe in hindsight, they'd be better off there. But if he only wants to mess with Bitcoin, well then, yeah, what kind of investor is he? What kind of buyer? What kind of trader? As he's somebody that's held for 3 years, that's a very long-term viewpoint. So what is his thesis for the next 10 years, 20 years for this asset? And if he assesses that possible gain and then thinks, okay, on that basis, how much would I allocate if I was doing it for the first time today, in the knowledge that there's a baby on the way? And if he had 30K in cash, how much Bitcoin would he buy, and how much would he keep aside for the kid? However much he would not buy Bitcoin, well, that's probably how much cash he should have.
Yeah. Well, so I agree with everything you said there. I mean, to put it simply, we already know that you're not going to spend all of that at once in February when the kid comes, right?
Yeah.
I don't know what you would spend all that on. with a kid coming. But I know like strollers and all that kind of stuff is really expensive stuff. Right? Everybody knows that.
Yeah, but so
Which
the
is why,
Gucci
which is
shoes, like
yeah,
the little
well,
little baby shoes.
which is why I said, I would probably using your thought process here. Sitting 50-50 is it's it's pretty. It's
Safe.
50-50. One way.
It's
Yeah,
safe. You've got
safe.
you've
That means
you're
you have
50%
you have
allocated to something that
yeah
you're massively up on and expect to go up, and
yeah
you've taken out probably way more that I'm assuming way more than your initial investment, and you now have money to buy what you need to for the kid. Congratulations, you just won at trading. That's the game. That is it. You
currently
win.
you have 100% success rate with Bitcoin trading.
Yeah.
So currently,
yeah.
but okay,
I wish I had half of that.
Yeah, so we're doing TA Monday, which means that now that we've got the question under our belts and we know what we're looking at, let's have a look at the charts and say, for if you're deciding to buy back, let's say with 50% or whatever percent of your portfolio that you want to put back in, let's see if we can find some of the potential buyback areas, right? And obviously, just to preface this, if we say 40K is a good place to buy back in and it goes lower, that happens, okay? It can go lower. Just making sure you understand this.
Yeah.
That's why we say don't go all in. Go all in.
Always remember, trading it's a game of probabilities. It's a game of chance, and all you are doing is you are trying to analyze statistical indicators, oscillators. They're just, all they are is maths. You're trying to take some maths and go, because this maths worked in the past, I think it's going to work in the future. That's
it. Okay, so we're back at our beloved charts that we still haven't changed much on these daily charts here, but I'd like to first point out that we have a sell signal here, a heavy sell signal on one of our trading strategies, just above where you actually sold. So that told you to sell at around 44, something like that. And you sold at 41, and currently we're at 41.7. So you're still very close to where you were, right? You had an opportunity earlier today to buy back lower at 40.6, basically, which is, a little bit better than where you sold, but it's still not that far. Like, why isn't it working? What did I do? There we go. So we just broke out of this trend line right here, first of all, because I'm looking towards where do we bounce, right? And I'm gonna go to the 4 hourly. Here we go. So we just had this, first of all, lower high, right? And we've had basically a flat line bounce here. So, whoops. Why do I always double click on things, Rob? Can you tell me that?
Because you're done.
Go. Yeah. Oh, that's right. So we've had this is actually a double bounce, or triple even, and then we bounced here again. So we're showing some strength at this level currently, or this range, which comes out between, let's call it somewhere around here, somewhere between 40.4 and 40.9. Is where we have kind of a range where we seem to have some strength, but we're still creating this type of downtrend, right? And what's to say that we're not going to just hit this and come back down? So you might have opportunities coming. The question is, how far down will it go? We've talked about this earlier in other videos, where we have the psychological level of 40K, which is this green line right here. And obviously people seem to be front running that a little bit with this.
Yeah. And which we can actually see offered absolutely zero resistance or support whatsoever. So yeah, people that think it's anybody that says, 40K is important, the chart doesn't think so.
And this is why live today I'm going to press delete on that line, because I feel like it's pointless. Sorry everybody who likes 40K. And I'm actually going to move this line instead up to right here, which is 40.5 instead, because now we've actually bounced there. This is more of a short-term thing, obviously. So I'm going to make this green. There we go. So I mean, if we fall through this, and again, I forgot to say, this trend line right here, it was cracked, and you see with this big red candle here, and this is 4 hourly, by the way, it's fallen straight through it, which kind of indicates that it had support there, but when it failed, right? It properly failed. Yeah. And now suddenly we're, instead of being in an uptrend, we are now in a downtrend. And, you know, we haven't really been in a downtrend since forever on Bitcoin, it feels like. Last time we had a downtrend was right back here. The rest of that, ever since the end of August, we've been in an uptrend, right? And currently, we're actually showing a longer-term downtrend with, you know, lower highs. And
yeah,
this
well,
is a,
as it stands,
it's a
descending
too,
triangle.
So.
Yeah.
Yep.
So we'll see if it breaks down. If it does, then yeah, look out below. We're going below 40k.
Yes, so. More than likely. and you know, the first support level we have, if we do crack this shorter term one, is, you know, this old trend line that we had, which is anchored all the way back here and all the way up here, that we broke through. And you can see that it had significant, you know, strength to it, because when we actually did break through it eventually, we really broke through it, right? That really showcases the power of the trend line. And now it's a support trend line, and I'd say flat, you know, horizontal lines are quite a bit stronger in terms of support. But nevertheless, that's around the area. So just under 40k is one area you could potentially think about if you decide to, and I'm talking directly to you now, if you're thinking you want to get back in with 50%, well, start with 10% of that in here, right? If you wanted to buy back, if you decide to do that, okay, maybe this is one area to start layering back in. You don't have to buy with everything at once, you know. Put a little bit in here, see if it goes lower. If it goes lower, the next level that we have on our charts at least is around 36.3, which is the fib level. That doesn't really show any significance to it.
So there's one line I would say to include as well is 38. Pretty much 38,000 dead, because if you look, that's basically the area we broke out from, and it's also the area that we dropped from beforehand.
Yeah, you're right. There we go.
And I would definitely so see, this is where we talk about
the drop you're talking about, and that's the breakout.
And even before that, there was some trading around that range quite significantly.
Yeah, it has some bounces here and stuff.
Yeah. And so, you know, this is that one of those examples of, we could break that uptrend, come down with a wick to 38, and then bounce from there back above the uptrend, and that would count as a hold of the uptrend. It would stop a lot of people out. It would get a lot of limit orders filled lower down, and that might be a catalyst to bounce. I mean, there's not been much significant volume so far, and if we see a decent volume breakout of that downtrend, and a bullish break of this triangle, which is a bearish pattern, then yes, that would make me want to kind of buy in more. That's likely currently not going to come till around above 42k, and this is the risk of trying to buy back in, is that when it goes against you, it can be very, very difficult, as everybody who's wanted to be in something and they're watching the price just ride higher and higher. It's difficult to watch that and be patient. And sometimes it's not a good idea to be patient, because you end up missing out on a larger move. And so, yes, there is definitely a case for kind of just biting the bullet. It's not much higher. Just buy back a little, and then you kind of wait and see. I mean, as you can see right here, there are technical indicators available which can show people how you can quite easily. It doesn't take a genius. It doesn't take any particular voodoo knowledge of TA and charts to look at the price action on this chart and see what indicators were doing what when these bottoms occurred. You can see them. They are right here on the chart. We're creating a lot of tools for hopefully to add a lot of value and convenience, and most importantly for us personally, automation. But the actual technicals behind the tools, they're just the technicals that we talk about every day. That we're not using. We the reason we talk about those technical indicators, as much as we're not going to explain all the detail behind the magic that have how they work, it's you can tell which indicators we use because guess what? We keep looking at them. So
and
yeah, it's
go ahead.
I would say I'll always give that one piece of like advice, that so general floating advice, knowledge. The only thing easier than making money in crypto is losing money in crypto. Like, crypto is really easy to make money in. Just buy something good when it's cheap and don't sell it. And
until it's not. Until it's higher than where you bought it, essentially.
Yeah, but losing money is very easy because look at the volatility on this chart. The majority of pumps get faded. The majority of the time that you have a rise, it just comes straight back down. The market gives you plenty of buying opportunities, and patience will win out in the long term. That doesn't mean it's not possible we just skyrocket up to 48k in the next 3 days and you're left in cash missing a decent move. But even if you did miss that move, well, you're talking 15% up from here. You are hundreds of percent up overall. So yeah, don't worry about it. Yes, okay, maybe you were a bit premature, and I wouldn't say.
But you had good reason to sell too. Honestly,
exactly.
Like you didn't do a bad trade. You made a profitable trade.
You won
for a good reason.
Yeah.
You definitely won. Yeah. No.
But the simple answer is this chart does not look bullish, and so it's not going to prove bullishness right now until it breaks that downtrend and starts putting in some higher highs. It's the bigger picture, the overall picture is one of bullishness. This is still a very clear and strong uptrend for Bitcoin, and all that means is it can drop a lot further and still be in an uptrend, just on these more zoomed out timeframes. And on the daily, yes, there's plenty of room for it to move down. On the weekly, it's got even more room to move down. It's this is a pretty extended chart, and if it came all the way back down to 31,000, that shouldn't surprise anyone.
Yeah, no, I was just about to say, we haven't actually looked at the weekly with our indicator yet, so I don't know if there is a sell signal there, but I think it might have one. So, looking at this now, I'm still talking directly to this Discord member. You sold at 41. You essentially sold the year top. Well done, first of all.
Yes.
Now, year to date, it's up 151%, and I know that you bought back in 2020, so you've made a significant, really good trade. So well done. But looking at this now with all these lines, I'm actually going to hide. What happens if I hide? Oh yeah, that hides too. Okay, never mind. So, looking here, we got the daily sell, and the RSI still has plenty of ways to move down. Usually, we talked about this before, when you top out on the RSI, it wants to come back down, and eventually it does, like right here. Same with this, down to here, up and down. It goes up and down. It's an oscillator, basically, right? We've bottomed it here, where we also had a green signal, which means buy a lot with this indicator. And then we had, heavy sells are red ones, and and so on and so forth. And now we're looking at a downtrend on the MA as well, the moving average, the yellow line down here. And for me, that kind of says it kind of wants to come down.
The RSI itself hasn't broken down yet. However, and the fact that the RSI is corresponding to the price action, in the sense it's showing the same trend, means if Bitcoin does break below this level, what we at, was it 40,500, it's probably going down a significant way further.
Yeah.
And
because
so potentially there is the potential to put a kind of trader's mindset in, is that you could buy, you can buy the amount that you definitely didn't want to sell and put that in the hodl bag. You could then buy another bit and set a stop loss. And if it invalidates this pattern, if it closes below, you get out of that position. And yes, you get out of it with a loss, but you do so expecting further downside price action. And you wait for confirmation of that drop, which will then say, and it's not saying to you, you've lost, that you're going to recover your money. Yeah, you're already in a loss. What it says to you is that you're probably going to lose more in the short term, at least holding on to this. And yeah, it should always be about risk management. And it's always the case. You always have to use this case is, what is your expected return over what time frame, and how comfortable are you holding through drawdown, and how comfortable are you buying here, and based on how far something's already gone and how far it's gone up versus how far it's got to go left, got left to go. I say I'm of course interested in Bitcoin over the longer term, but I'm not massively interested in buying Bitcoin right here, because the altcoins are starting to wake up, and my job is in this market for me is to trade the most profitable stuff to trade, and Bitcoin is a bit slow. It's still my biggest holding. I'm not particularly touching it. Bitcoin is around 60% of my holding, and basically the rest of it is liquid dollars. They go in and out of basically altcoins, because I'm not messing around with my Bitcoin bag. I'm currently looking into the idea of how I can automate my strategies to include more or less Bitcoin depending on how the market goes, and it can get messy and complicated, and it's also, but you can do it quite simply by just slowing down, taking your time, and just relaxing and not making emotional decisions, and splitting your pot up into, this is what I need now. You can get to certain thresholds, and you just basically move a bit of your investment from the I'm holding this to the day I die to, actually I really could do with some of this cash. It's okay to change your mind and go, I'm going to just release some of that, because I'm weighing up, and you've got to weigh up the cost and benefit, the opportunity cost, and what you're potentially giving up in order to do that. And when people do that, it obviously makes them not want to sell their Bitcoin, and that's kind of the point, right? But you only have one life. Life is for living, and if you've made massive profit on something and you need the money, for God's sake, take it out.
I agree.
Do not leave profit on the table that you need. And that's it. The mantra, only invest what you can afford to lose. You have to take that as in, this is what I have right now. Would I, if I had it all in cash, would I throw that all into the market today under these conditions? And if the answer is no, then you should have a cash position.
Agree.
That's simple. Because you are at that point, you are overexposed according to your own risk management, and only you know what your own risk tolerance is. I've been here for 6 years now. My risk tolerance is extreme. I've had enough 50% drawdowns to not even, oh, okay, I lost half my money again. Oh, that sucks. And so but it happens. It's a part of the. It's
a part of the crypto space. It's volatile.
You do not get 1,000% rallies without 50%, 80% pullbacks. It just doesn't happen.
So I agree with everything, 100%.
Everything.
I do want to say though, if we do, break this. No, it's not doing it again. If we do break this descending triangle, it looks to me, if you're correlating this breakout price at 40.5K and go to the daily RSI and look, and we basically double bottomed here. I don't know if you can make a line here, maybe. Yeah, I can. It's double bottomed on the RSI, which is kind of good, but what I'm kind of afraid of here is, if it breaks this price line here and the RSI, and it closes the RSI line under 50, that tends to make it move all the way down. right?
Which is so that's what I mean. Is in right here. This is the sort of place where you can, if you want to be a bit overexposed, and if you find yourself overexposed, you don't have to smash market sell. You can set a stop loss. You can just have invalidations based on the chart, where the chart says, if we hit this price, we're probably going to drop lower. Split your bag up, and you can put sells at various levels, and that way, if you ride it down, every time it hits a stop, and you've seen what happens when stop losses get hit, you get cascades of them when we move 5-10 more % down, then you can be one of the one that's sold by then, rather than one of the ones selling after it.
Yeah. I'm going to jump over to the weekly here just to see what it does. And yes, we do actually have a weekly sell. The first one, this is a heavy one too. This is the first one we've seen. And actually the weekly ones, I think I only want the heavy ones. So the weekly ones tend to kind of give you market peaks or range peaks. So previous bear market, or previous bull market, perfect, I would say.
Well, you have to do so. Just a caveat. So it will sell the close of the candle it's pointing at. So
however,
just a caveat, it looks like it's going to go, look at me, I'm right at the top, but it does sell the close. Well, it flashes. So yeah.
So what happens is, if you put this indicator on the 1 minute charts and you're looking at, you're going to be able to see these sell signals depending on how the candle moves up and down. If it's really volatile, you're going to see it flashing like that. So it doesn't show up at the candle close. It stays there after the candle close, but it will flash during a candle move. Okay, so you might, this red one up here might have appeared already around here somewhere, and not all the way down here, right? So just to preface that, not always, but that's kind of the thought behind it. And the thought here is, even if you sold the candle close on these, you have been riding the wave significantly from where you purchased. That's kind of the idea.
It's not about selling the absolute top. This is supposed to be some sort of knife catcher. Now, knife catchers can be wrong. You can have a sell-off, an extreme sell-off,
like here,
and then it consolidates, and then it just carries on again. And you will never guarantee hitting every market peak. Has this got the rebuy off, by the way? It might have a few bit that it's missing.
I've turned off.
Turn the cool down to 1.
I'll do this to 1. Yeah,
there you go. We've got a few more. There we go. That's better.
I've got much more. Yeah. No, but so what I did want to say with this, we're not going to go into the indicator right now because we're not able to release
Why
it to you
not?
guys yet.
Look at it. It's beautiful.
Yeah, it's beautiful, but up here we're getting a. You see
this.
Yeah, we made this, but anyway.
Yeah, collective.
Okay, so we have a couple of softer cells right here, and you see those appear way before the actual peak. Red tends to say stop. So red usually means it's time to get out pretty heavily, and that's what we've just seen. So again, you sold at 41K last month, I think you said it was somewhere around here, and you're looking at selling basically the cycle top, and this appears, as you can see, during the bear market pull up, bear market pumps, and then you get to buy back again. So this is, at least the indicator here is telling us, with all the stuff that we put into it, that it's
not a bad place to take profit.
It's not a bad place to take profit, and
that doesn't mean that. Let's say that, and this is the thing. You can look at it and go, yes, there are premature sells. This is never going to tell you the absolute best part of the market to sell, because it doesn't know. All it can do is look at the information it has, and that's all any trader that trades on a technical basis can do. They can just look at what they've seen already, and
that can happen. For example,
that could absolutely happen. And if it does, then okay, great, it'll put another signal at the top. Now, if you sold 100% at the first signal, well, yeah, you may well be out. And so yeah, this is kind of how I'm looking at it. Is I look at this and how you can see these excessive moves, and you go, it's time to just maybe de-risk a little bit. And de-risking can mean different things to different people. But however you quantify de-risking, this is the kind of time to consider
This
doing
can
it.
also happen.
Yeah.
For example, this is kind of what I'm personally kind of expecting, because we've been talking about, and you're getting back to your question where, should I buy back or not buy back? If you decide that you want to buy back with half of what you sold, great. I I personally wouldn't look at doing it right here, because then it doesn't really make a difference for you. Wait for it to come down at least to some type of level where you feel like it's kind of worth taking the risk again, because right now you're looking at all the indicators telling you it's time to sell. And if you're gonna take the risk to buy back, and you know that you might need the money in the next 6 months, I would just wait personally for a while before I even make the decision.
Or at least make sure you are not allocated with money that you can't afford to lose. How will you? That's the question to ask, is how you will feel if you went all in again, and then when you needed the money, Bitcoin was at 30K. And that is not a surprising thing. That nobody should be surprised at that. And if you can be patient, and even if it decides it's going to go up more, the market is going to reverse first. This is it's only a short-term downtrend, but this is looking a bit toppy and downtrendy. It doesn't look anywhere near as bullish as it has done in recent weeks. So it's very unlikely. It can do. Something could come out tomorrow, and a piece of ETF news, for example, and we wake up and Bitcoin's at 46K. I mean, okay, what can you do about that? That's there's nothing that you can do about that. That is, the market is going to do what it's going to do, and the technicals will not mean a thing if several $1 billion just flows into the market for lols. So
for the lose.
There's nothing you can do. So yeah, it's I guess this sort of ended up being a bit of a brain dump episode about our thought process of risk management. I've quite enjoyed it. It's been quite interesting.
Look, the thing with TA, then I think this is healthy as well, that you guys you're forced to hear us talk about this stuff, because we keep telling people you cannot just look at TA. I mean, if you're a trader and you just want to trade some stuff, sure, go ahead. But like, if you're thinking about from an investment standpoint, if you have the trader's mindset and you're trying to invest, and you just use technical indicators and that's it, it's not going to go well for you. Like, I'm sorry. You need to take all of these things into account. And I do want to say as well, like, I think you touched on this in the beginning. I'm so tired right now, so I can't remember if you said it or not. I might have just thought it, but you have to figure out what type of person you are. Like, what's your risk tolerance? What's your time preference? What is your, what's your overall thesis? How do you look at investing? Or trading? Like, are you looking to trade? Or are you looking to invest? You have to figure these things out.
Yeah.
And there are some models that I actually have saved somewhere that I think I might make a video on later, where you can figure out what type of person you are, what type of personality traits you have, and what weaknesses you might have as an investor within your own personality. And if post
it on Twitter afterwards.
Yeah, no, I think I'll make a video on it instead. It's better. Yeah, it's gonna be a long one, because just putting a picture up is not really gonna work. But if you know your exact personality type, and then you look at what all the different big successful investors are like, and what mindsets they have, if you know that you're missing, if you're missing one of those traits, then at least you know where your weakness is, and you know what to really think harder about, which is going to help you if you're going to be an investor. If you're going to be a trader, it's the same thing. The most successful traders have these traits. Do I have them? Oh, no, I don't. Okay, then I have to think about that. So as long as you think about that, you're going to do a lot better.
Yeah. But just one final point, something to point out around using using indicators and deciding where to sell. And if you're trying to knife catch, and this is the primary reason to advise against knife catching in both directions, when you're trying to sell tops or when you try and buy bottoms, is that the most successful coins, the stuff that does the highest multiples, is going to spend more time in overbought territory, meaning it's going to give you more and more and more signals that say, look, this is a great time to sell. And then it pumps, it comes down a little bit, and then it just goes again, and then it goes again, and it goes again. And look, the likes of Injective, the likes of Solana, these kind of coins where they've done a 20x in a year. And yeah, you see that's given a lot more sell signals.
25 even.
Yeah, that's done given a lot more sell signals and a lot fewer buy signals than Bitcoin has. So if you had followed this strategy, and I realize that I'm not supposed to say bad things about our strategy, but no, it's a it's a realistic feature, is that the best performing coins are going to have more sells and fewer buys, and the worst performing coins are going to have more buys and fewer sells. And so you have to take that into account when you're trading. That if you have high level of conviction in something, well then you have to hold through the insane multiples, because you're holding for higher, and in order to make those kind of gains, it has to be outrageously overbought numerous times for extended periods of times, and then it sells off like a mother, and you shit yourself, you sell out, and then it decides, haha, thanks for the liquidity, I'm off again.
Well, okay, so now that you've said all that bad stuff about our strategy, no, so look, on a serious note though, this is a trading strategy, okay? Yeah, this is meant to trade, not to hold through exponential moves. It's meant to trade in order to get a whole bunch of trades done, right? As you can see, it's been trading.
I mean, we're looking at this on the daily. You can use it on the 5 minutes. So
yeah, you can use it on the 5 minutes. It works everywhere. And if you're looking at a coin and you're putting this indicator on top of a coin that you want to trade, look back and see, okay, it doesn't do well in exponential moves. Maybe I shouldn't be using this right now if I'm looking to do whatever you want to do with it. It's pretty simple. However, if we go to the weekly, for example, there's an argument here for, okay, maybe the coin that I really want to accumulate, maybe I should put this on the weekly instead and treat it more as a long-term thing, which means you would
a risk management point of view, where all you simply do is say, you know what, I've made 10x with this, and I've got a big flashing red sell signal. Whoops. Maybe I should sell 10%, 20%, a little bit,
something like that.
Oh, my car repairs, that car repair that I needed that was $1,000. Maybe I should take some of my $10,000 investment. There are many things that people will be greedy for and go without, and they will go without something because they're going to make more and more and more money on something that's already made insane gains. Now, this may go on to $100, $200, $500. I've got no idea where Injective's going, but if you bought at $1 or $2 and it's now 30, and you have a reason to spend that money, it would not be a surprise looking at this chart and looking at the size of this move to see this back under $10. I'm not saying it's going to happen. I've got no idea if it's going to happen, but I wouldn't be surprised. And in that case, you would be very happy you took some profit.
Yeah, and speaking of $10, here is a very obvious flat
support level,
support level on $10, and that's for Injective, but we're not going to talk about Injective.
No, but it was just an example though. But you have to temper your expectations and go, if you're expecting 5,000%, well then don't sell every 20% pump.
No, exactly. If you're getting into something like, let's say, a new coin, Shadow, for example, Shadow token. I don't know if I had I do. Okay. Yeah, that's annoying. So just looking at the daily, this is only available on Dexes, I think, and one centralized exchange. But you can see here, it's like if you get in really early on something new and you expect this token to do 5,000% over for the next bull market peak, you're not going to be using this trading strategy to sell big chunks on the daily or the 4 hourly or whatever, because you're not going to, it's always in bullish territory. So keep that stuff in mind for all that.
Or even then, you can look at it, you can objectively say, I think this was a good place to sell, and then agree with it, and then put a buy order in, and then watch it. You don't have to rely on just an indicator. I would also always recommend not relying on an indicator. We are trying to look at how to turn this into an automated strategy, but even then, it would be as a trader. This is not something that holds on to coins or is to be for the long run. It's designed for now is a good time to take profit.
This is what it's designed for.
Yeah,
sideways moves, trades.
Yeah, but even then, that liquidity is awful. This doesn't work.
It's bad, bad liquidity. Yes, but
this doesn't work very well on the liquidity stuff. But yeah, it's that's what it's designed for, is picking up bottoms, and you won't always win doing that.
No, you won't. But again, it's just an indicator, okay?
Of course.
For now. So, but yeah, I think we're gonna need to round it off here because I am. Oh gosh, it's been 16 hours since I got up and started working, and I'm tired. So I'm gonna have to round this off. But I hope that answered kind of your questions that you had, because I knew you had a lot of questions, and you formulated one that we could respond to a little bit, and hopefully that helped you with some of your thought processes at least. At least I hope so. So there's that, and we will be in Discord as always, you guys. Like everyone who's watching, we're always in our Discord. We're always around. We would, if you don't know how to make a stop loss, for example, if you don't really know what that is, if you're new to this whole trading thing, and I'm still talking to this community member, jump on Discord. We're right there. If you ask us, can you guys explain to me how to set up a trailing stop or whatever? Yes, let's go. We love doing that stuff. Like that's what we sit in Discord and talk about that all the time, literally. So just jump on, come talk to us. We'll give you our thoughts and everything.
How do you think this guy learned how to do it?
Yeah, that guy. yeah. So he's like Yoda, this guy. No, but seriously, we're gonna have to round it off. So leave a like, subscribe, notification bell, and all that stuff. Join the Discord, and tell all your friends, or Darth Vader will come and choke you or something. Maybe, I don't know. All right, cool.
Maybe you're into that kind of thing.
Yeah, we'll see. All right, cheers. Bye.
Bye.